And staying in the United States, the U.S. Federal Reserve has lowered interest rates for the first time in 4 years. The 50 basis point slash will drastically cut interest rates on mortgages, car loans, and credit lending for millions of Americans and even those around the world. The last time the Fed cut interest rates by 0.5% was in 2007, which led to a massive lending for low-income home buyers, eventually causing the greatest financial crisis since the Great Depression in 2008. Are we staring at another global recession? And is history repeating itself? Here's more on the latest cuts by the Fed.
Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by 0.5 percentage point.
That was the United States Central Bank Chairman Jerome Powell announcing the lowering of interest rates by 0.5%. This is the first reduction in rates in 4 years, and the last time the rates were cut by a whopping 50 basis points was in 2007. It allowed consumers to borrow more from banks. Low-income house buyers were given large loans at lower rates. However, it all came crashing down in 2008 when financial services company Lehmann Brothers filed for bankruptcy, bursting the housing bubble. What followed next was a global recession, the biggest since the Great Depression of 1929. Similar to 2007, the Fed has cut rates by 50 basis points again. What does it mean this time? Americans will be the most directly affected. Borrowing is likely to increase due to the lower interest rates. Lower interest rates also mean that savings accounts become less attractive. Lower rates is good news for home buyers as they will get loans at lower costs. Car loans will also become cheaper. Credit card debt, which is one of the most expensive loans to own, will also get cheaper, allowing faster repayment of the debt. The Biden administration says the post-COVID-19 inflation is over and the Fed agrees too. The larger-than-expected rate cut could trigger a stock market boom and reduce interest rates on loans and credit cards. All of this benefits the Democrats and Kamala Harris, given the U.S. economy remains a top concern for American voters. There are increasing fears that the U.S. is heading into a recession. Layoffs in American firms have also been growing. With the rate cuts, the Fed is hoping for greater economic activity in an attempt to revive the economy. If the Fed can avert a recession, the economic benefits of the rate cuts would be global. However, Donald Trump feels that this is a last-minute move to save the American economy.
I guess it shows the economy is very bad to cut it by that much. Assuming they're not just playing politics, the economy would be very bad, or they're playing politics, one or the other. But it was a big cut.
Compared to other central banks, the United States is late to the party. Europe, the United Kingdom, New Zealand and Canada have already cut rates. The 0.5 percentage cut certainly is a massive surprise. The cut will also weaken the dollar and give a boom to European and Asian stock markets. Foreign investors will benefit along with foreigners who own stocks in US firms. Lower interest rates decrease borrowing costs, which will drive a demand in the global oil market, and the lower interest rates will drive the prices of gold even higher. So, apart from Americans, the Fed rate cut will have a major impact on other countries as well. The US Central Bank has moved slowly and steadily. It took 11 meetings to go from 0% to 5.5% after the COVID-19 pandemic to now. And the journey to go back down has begun. Economic experts are predicting that the rates will be cut furthermore over a period of months all the way till the end of 2025. With the US election slightly more than 40 days away, the cut could likely help the Democrats to return to power in 2025. But the US Federal Reserve will have to play its cards right to prevent another global economic crisis like the one in 2008.